So with today's video, I want to start off with talking about this article that Ray Dalio has put out. And I think it's going to give you some good context about why I see a very strong move to the upside coming in the stock market here. So this is a link here from Ray Dalio. And you can see here on November the 6th, he talks about it here. Did you see the Fed's announcement that'll stop QT and start QE? This is on his LinkedIn page here. Now, the interesting thing is that as I continue to go through this article and we go through, it says here, at this time, it should not escape our attention that when the supply of the US Treasury bonds is larger than demand for them, the central banks is printing money and buying the bonds, and treasuries is shortening the maturities of the debt sold to et cetera, et cetera, et cetera. Okay, this demand shortfall in long bonds, these are classic big debt cycles, late cycle dynamics. While I comprehensively explain this mechanics, et cetera, right? Going broke, I want to do both here, right? Now, the whole nutshell here is that we can see he basically talks about how we're late in the debt cycle and all that sort of stuff here. But the one big thing here that I really want to say is, okay, with a lag, it should check out this here, okay? With a lag, it should be expected to raise inflation from what it otherwise would have been. If real yields fall of QE, but inflation expectations rise, nominal multiples can expand, but real returns erode. Now, this is where, when looking at the big picture with gold, while I see weakness in gold overall, or at least just another sideways consolidation, I'll get to that chart in just a minute. When it comes to, if I just bring up the actual gold chart here, this is the gold chart here. This is the reason why I honestly believe what's happening right now is actually a setup for a $10,000 or so gold, but coming in the coming for the rest of this year. And the reason why I say that is because I see there's going to be a real big inflationary problems from here, and when I get to the actual interest rates part of this as well too, I see interest rates getting weak here short term. What's happening here, but then there's going to be some real sort of big spikes when it comes to the interest rates here. Let's actually do this here. But this is this sort of section here, right? It would be reasonably to expect that similar to late 1990 or to late 1990 or 2010, 2007, there will be a strong liquidity melt up that will eventually become too risky and have to be restrained. During that melt up and just before the tightening, that is enough to rein in inflation that will pop the bubble, is classic ideal time to sell here. This time is different because the Fed will be easing into a bubble. While I would expect the mechanics to work as described, the conditions in which this QE would take place are very different from those that existed when they take place before, because this time the easing will be into a bubble rather than into a bust. More specifically, in the past, QE was deployed when asset valuations were falling, the economy was contracting, inflation was low, debt and liquidity problems were large, and the credit spreads were wide. So QE was a stimulus in depression. Today is the opposite. Asset valuations are highs and rising, the economy is relatively strong, inflation is above target, credit, etc., etc. So QE today is a stimulus into a bubble. And as you can see here, so the big thing here is that we can see obviously what Ray Dalio is talking about here. I recommend you go through and read this from here, but I wanted to start off with today's video here to give you a perspective of what's coming. But I think that with what he's saying here, what we're probably likely to see is if I bring up, say, let me bring on, say, a daily chart of, say, the Dow Jones here for a minute, okay? So the Dow Jones is doing this here right now, okay? Do I have any trend lines? No, okay? So the Dow Jones this is the Dow Jones here. And if we have a look at the Dow Jones, we can see we've had this nice little trend line coming up through here, right? So if we do get a bit of a melt up from here, now actually for me personally, the S&P 500, I've always had an end of year target of the S&P 500 of say 7,500 up through here somewhere. So what that's probably going to what he's talking about there is this. Firstly, we're already in a very vertical move, right? So we're already in some sort of bubble territory. We're very, very vertical. And if the Fed does do what it's doing right now and Ray Dalio is right, then what that simply means is with the stock market, we're probably likely to see a nice rise up to there. So when that happens, that's when it becomes very dangerous and you start to see sharp corrections on the other side. And this is where a buy and hold mentality right now for a long term is probably going to be a very risky strategy, especially in this environment here, because then that's when you start to get the very sharp pullbacks from there. Just like 1987 did, you get these very sharp pullbacks from here. So the overall cycle of things is probably for the next, say, 3 to 6 months, is probably going to be representing something like that through there. Then on the other side of that, meaning towards the later third, fourth quarter of 2026, we're probably going to see something like that through there. Now, here's the thing though, is a lot of people out there, when they start to see this, the noise is going to be very noisy again in the markets, right? The noise is going to become very noisy again. And this is where we want to be very, very, very sort of cautious around here. So, and if you have a look at this, this is the Wall Street cheat sheet, and where we are right now, if you look at this Wall Street cheat sheet, and if I bring up the actual fear and greed index, this is the fear and greed index here. And even though the stock market, this is the S&P, even though the S&P right now is at here, we see what Ray Dalio talked about here, stimulating the bubble. Okay, so that's an overall basis. That doesn't mean the market doesn't just go straight up, right? Even though Ray Dalio is right, what does the market do? It will step up, right? We have big pullbacks and so on and so forth. But the interesting thing is that if we have a look at this here, there's a lot of extreme fear here. That normally the extreme fear comes. The last time we had this massive extreme fear was when? Back here. When was happening back here? This is the whole tariff situation, right? The whole tariff situation. So this is what's happening here. So any sort of drop in the markets that we see, okay, any sort of drop we see in the markets and through here, we're probably likely to be very short-lived because of how much fear in the marketplace. And that simply tells me that we're in this rally through here. It sounds to me that there's like a disbelief, maybe a hope, maybe even optimism from here, because it's like I'm personally seeing it with my YouTube comments about how there's the top is in, so to speak. Even though we keep rallying up to new highs, the top is in. And so what you don't want to be doing, you don't want to be going against the market right now. There's all these indicators why the market's probably going to continue going up for the rest of this year. A bit of a slingshot move. We are continuing to see very strong upward leg from here, right? If I go to the Dow Jones, you can see what I'm looking at here, right? So very, 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 very strong upward leg from here, very strong bull market. And we also have this sort of going on through here as well too. So that's sort of what's going on. So we're probably going to break up through there and start to see a nice rise out of this level from here. So that's the first thing I do see when looking at the first thing is we're definitely trending up. Secondly is obviously we're stimulating into a bubble. And thirdly, we're out of fear. This is normally pretty good buying opportunities in the past when we see the fear in the marketplace, right? So we see right now where we are in the stock market and what's happening here. So even if we do get a little bit of a sell-off here over the short term, there's probably going to be a very, very, very strong rally coming into December. And to finish that off, December and January. And then we need to be very cautious about what happens after that from there. But from where we are right now, we can see that the Dow Jones, really nice movement to the upside, compressing up. We go to the NASDAQ. NASDAQ's doing the same type of things as well too. We've had a very nice rise, and we're probably going to continue to see that through there. And the same thing for the S&P 500. Now, what I do have is, this is my weekly chart through here. So what could start to come in place if we did get a little bit of a drop to the downside, just a little bit of a drop, these this area through here is probably going to come into place through here on the S&P. And then I did the same thing for the NASDAQ as well too. So the NASDAQ could ultimately see a total of maybe a 10% drop to the downside. And that's probably where it's going to end. You can actually see, if I bring on this here, you can actually see this trend line that I've drawn actually is definitely respecting it through, as you can see, we had this resistance all through here, resistance, and it respected it through there. So if it did come back down to here, that's probably all she's going through, right? And then we're probably likely to see another move to the upside from there. So I definitely want to be short this market. And for you guys that are trying to call tops right now, it is probably there's so many flashing lights saying do not be trying to fight this market right now, and because you're probably going to get run over from there. And so yeah, so that's what I'm looking at from there to there, guys, and obviously the Dow Jones from there to there as well too, and what's going on. Now, looking at gold and silver, guys, today. One thing I really want to talk to you about with gold and silver is how the different phases of these markets typically go through. And gold has been doing this for a while, right? We go through these different phases, which is called price phases and time phases. A price phase is when it's strong. A time phase shows strong, 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 and then strong, right? So that's what's called time. That's what's called price phases. I learned this from WD again. Okay, so there's the price phase. But then also the time phase. There's a time phase when the market needs to refuel, right? So after a period of a price phase, we go through time, and then also the time there. See that through there? So after every single move, when the move finishes, we typically go through these at least a couple of months worth of time phases, which is sideways. You end up getting sometimes you get very strong pullbacks, like market goes up and then we get a very strong pullback. So we're in these what's called this time phase here. And these time phases typically last, especially when you start to get these types of moves from here, they typically last 2, 3, sometimes 4 months. And the reason why I'm bringing that up to here is that because if you actually look at gold, to me, gold is probably not going to be doing much now for the next couple of months. And the reason why is just off the back of what I just said there, we already had a very big price phase through here. And then we went through a 4-month time phase. It refueled. And then we had another really big move to the upside. And now we've come back down to here. So we're probably going to be doing this through here for the next couple of months. Probably not doing much. And what that not doing much simply means is volatile. Up and down, right? We can see here, if I zoom right in here, you can actually see that there's a lot of volatility through these what's called these time phases. There's a time phase there, there's a time phase, and there's a time phase. We're in this time phase right now, right? And then you obviously have the price phase, and price phases through here. So after every price phase, there's a good 2 to 3 months, sometimes 4 months worth of time phases from here. So, but these time phases can be volatile. Look at this here, up and down and up and down and up and down. So when it comes to gold, gold may not get a big significant drop, or it's already had a nice good drop from its highs. But to me, there's a massive probability we're going to see one of these phases, and it's already started, I believe. And now we're probably going to be doing something like this. It's probably going down, up, it might come up through here, come back down through here, and we're probably just going to go, we may even just go sideways. If it does go sideways, well then this sideways here is going to be 3 to 4 months before we actually end up refueling to go for another move. And so far, this sort of time phase has started, and so far we're about, 24 days in, right? So we're about 1 month in. We need now another couple more months. And I would say that by looking at this trend line here, and if I bring on my moving average, you'll be able to see what I'm looking at here. So this is the weekly chart here, as you can see. So the weekly chart and the moving average sort of come in hand. You can see what happens here through the past phases we're in right now when it comes to gold. And we go through a move, we have a pullback to the moving average, up, pull back to the moving average, up, pull back to the moving average, up, pull back to the moving average, up. We're going to probably pull back through here, let the moving average catch up. So this is probably going to be sort of X marks the spot somewhere through there, I would say. And it's probably going to be just another one of these, pulls back to the moving average. So yes, while gold is a very strong big bull market right now, right now as I speak, gold is probably going to be, if it is going to go just sideways again like it has been doing every single time, then if we go back to this 120 moving average through here represents that moving average. This is the weekly chart, this is the daily chart, and as you can see, we're probably going to be representing that through there. So I would say that if gold is getting ready for another big move to the upside, guys, it may not happen now. We may have another couple of more months of it not doing much. And if it does continue to hold here, that's actually very bullish. If it does do another one of these patterns where it just goes sideways, that's actually very bullish for gold if it does do that through there. And then we can see that, and then we have... then see this moving average through here. If this moving average continues up through here, continues up like that, and then suddenly the market then suddenly does something like this coming through here, then we're probably going to continue up and then have a nice move from there. So, but for now, we're probably going through there. And that's basically the same thing for silver as well too. We go through these different phases, and the same thing for silver. Silver's had a very nice move to the upside. Right now, silver's probably not going to be doing much, and that's the reason why also we're getting huge volatility swings right now in gold and silver, because this is what typically happens when you go through these time phases. The big swings up, big swings down, huge volatility in the markets, and then that's what you normally get from there. So right now is not the time to trade gold and silver, because these environments, these time phases, typically they sometimes they can get really volatile. And it's especially not with silver as well too. So silver might be getting ready for another move to the upside, but not just yet. I see silver at least coming back through here for the next couple of months. And once again, we've had this very big what's called price phase, or the energy using phase, and so now we need another couple of months just to let it just, you know, down up, you know, just to refuel from there. From that perspective, from there. So looking at the overall, now with that, that's what I'm saying through there. Now, looking at the interest rates here, this is something that I really think is important when looking, say, for example, the interest rates here. And if you see the interest rates, this is the long-term weekly chart here with the interest rates. And let me take off the moving average here for a minute. So what I see coming right now is based off, again, stimulating into a bubble. We're probably going to get lower interest rates here initially for the next 12 months. And that's therefore the bond market's probably going to get a nice rise over the next couple of months, over the next couple of years. It's one of the reasons why I'm invested in TMF myself. So, but what I see coming is as we continue along into the early part of 2026, we're probably likely to see the interest rates start to come down a lot from here. But I don't believe we're going to come back down to here, because I believe this 40-year cycle that we've been seeing through here, this big sort of cycle we've been through here, this is a big break up. To me, this is all down through here, a big move up, a big move down, and then we're going to see this through here. And the reason why we're going to see this through here is because we're going to start to see another massive inflationary spike, which then that's when we're going to start to see gold race towards the 10,000 plus level, I do believe. So initially though, interest rates come down, they're stimulating to a bubble, they're going to create inflation, the inflation is going to start to get out of control again, and then this is when we're going to start to see this market drop down through here, and then we're going to start to see massive long-term rates. This is where, this is the danger of what I see coming in the 2030s, because if interest rates have been so low, have been going through this phase all the time, and then we start to see this rise into the 2030s like this through here, I can imagine what the stock market looks like. I can imagine what the property market looks like. There's probably going to be a lot of people that's going to hurt through that process. My only job and my only coaching advice to you is get ready for that, and make sure you're not loading up when you're looking at buying property, and when you're looking at, you know, having loans and debt and all this sort of stuff, especially if it's debt, you know, and it changes like credit card debt and so on and so forth, right? because those who are taking care of their house now, right? They're taking care of their house now, and they're seeing the future for what it's likely to come. Initially, yes, we're going to print some money right now. They're stimulating into what's happening now, a bit of a blow off top in the stock market, lower interest rates, rise in the bond market, okay? But then after that, guess what? Then that's when, as Ray Dalio says, that's when the Fed's going to put on the brakes, especially the bond market as well too. And then that's when everything's going to start to change from there. They're going to start to tighten again, raise interest rates again, go back to QT, tightening up because things just got out of control. And then on the other side of that, that's going to create another inflationary spike. And then on the other inflationary spike, we're going to probably get to see something like this here. And this is where, on this side here, after say around about 2027, I reckon that 2027 into 2028, which is that period through there, that's when we're probably going to start to see this rise. And that's when I'm very massively bullish gold and silver in the mining sector from there. Massively bullish. In fact, I believe when it comes to the mining sector, and if I just bring this up to here, my baby in a sense is GDXJ. I honestly believe that, as you can see here, I honestly believe that the mining sector has already had a first leg up in a massive bull market. Now, just like what I talked about here with gold and silver, that we've already had this big price phase, right? So now, just like all markets, we're probably going to go through at least a 2-3 month, maybe even more, because how big vertical this is. But overall, what I see coming through this level from here is I see this market having a bit of a pullback from here down to there. But this is a first leg up in a very big bull market. And then we're probably likely to see a nice rise up to that through there. So even though we get a bit of a correction here, gold and silver and the mining sector, I am massively bullish. And I think there's going to be so much money to be made from this. But just going back to the interest rates, this is the 30-year. Okay, and this is the 10-year from here. And you can see I've already got the trend line drawn from here. One thing I do see is, just by seeing this level from here, I see maybe a drop down to here somewhere. And maybe on a sort of, and I say maybe, maybe on a sort of a maximum level, we'll get down to this level around about maybe the 2s, maybe. But then that's probably as low as it's going to go. All right, we have this level also through here, also through there as well too. This here to me, this whole point through here is a major bottoming pattern. We've been doing all this here since the 80s. 80s interest rates have been coming down. We're probably likely to get a rise. It may even not get down that far. I'm just talking about the market coming back down to here. It may not get down that far. It may, but then on the other side, that's when we're probably going to start to see, even from a 10-year perspective, we're probably going to see something like that going on from there. And then that's when all those people, especially, and this is where like you think about like your future, right? And the way that you do things, in your trading. And this is the reason why, guys, I've been giving away that brand new X Factor book, right? It's all about the mindset and psychology of trading and make sure you're not doing stupid things. And that's the reason why I have a coaching program as well too. It's because I'm trying to get you guys set up with this here. And one of the things that I've found in my personal 20 years experience of trading these markets is I have found that the rewards come to those who can sort of see the patterns and see what's likely to come and take advantage of it. But then also the real reward comes to those who are not going to be tempted by short-term gratification, by expensive cars, like all that, debt, credit cards, all that sort of stuff, right? Because if what I'm saying here is true, then those over the next couple of years, as this thing comes back down here, and then they start to load up on cheap credit, right? Credit cards, car loans, maybe even property as well too, and not locking in a long-term rate. Now, property obviously down here, long-term rate would be amazing. Now, those who are not smart, eventually what ends up coming towards them? Eventually, the history, or eventually time catches up with those mistakes. And as you know yourself, right? Like I've had mistakes that I did 10 years ago that I'm paying for right now. Or actually, I'm not paying for them. But yeah, there was mistakes that I did well over 10 years ago that it comes to the surface, right? And this is what I don't want. This is what I don't want for you guys. And so my whole purpose of this is to show you what's likely to come. This is one of the reasons why I'm very long and bullish TMF. TMF, TLT, I see initially this move down through here, and then we're going to get a rise out of TMF. But that is all I wrote from there. My massive long-term bullish, not just from the next 12 months, but for the next 5 years, is definitely gold, silver, and the mining sector. But we're probably going to go through, as we said before, probably going to go through that time phase, that correction, and it may even last 6 months. But then on the other side of next year is going to be a crazy big bull and bear market. There's going to be a lot of people, there's going to be a lot of people getting wiped out. But I want you to make sure that you are thinking about that there will come a time when this thing here happens. And if you are not trying to make sure you got your house in order, meaning don't load up on that expensive car, right? Don't take that car loan. Don't take the car loan for a 6-figure car loan, even though you can, right? Buy a nice, good 20 or 30 or 40 or $50,000 car, right? And buy it in cash if you can. You know what I mean? Like, it's like all these different things. And by the way, what I'm telling you right now is what I do in my own personal life. I don't have any debt, right? I don't have any personal loans. I don't have any credit cards. I don't have any, bank loans through there. There's none of that. I don't owe the tax. I don't know the government anything from now. Like all my taxes are up to date. My car, I bought my car in cash. I'm setting up my home base and Slash, which is helping me save a lot of money as well too, and do really well from that, which is also helping me with my trading. And so I'm doing that because I see that I know my what I'm seeing now of the next 2 or 3 years, people are going to get run over because they're not thinking about the future, right? There are a lot of, and this is where a lot of traders get in trouble, right? They think about what's happening today. Oh my goodness, big green candle today to the moon, big red candle today. Oh my goodness, it's going to the hell in a handbasket from there. Makes sense? And so, and that's obviously one of the big reasons why most traders stuck is because they're so focused on the small little increments of the up and down green candles. But as you can see here, this is over many, many years. And then these many years take time. But I have just found myself, if I want to make a lot of money from trading, just see these patterns coming, like what we've just seen just recently. Ray Dalio talking about what's coming. So to see the interest rates come down, one, it's probably going to happen. Two, you can just see it all start to come out to play right now, right? And then you can see what's going on from there, from that perspective from there. So just make sure you're taking care of your house from here. The number one thing for me, number one thing that I would say is just make sure that you understand that whatever decisions you make, if you're taking on a 5 or 10, if you're taking a 5-year car loan or a big mortgage rate and it's an adjustable rate, and you know in the back of your mind there's going to be big massive long-term rates, just think about where are you going to be 12 months from now, 2 years from now, 5 years from now, from the decisions that you're making in your life. And I'm always doing that myself, right? Like I'm always thinking about that myself. And that comes back down to the people who I'm hanging around with. Like if I cut you out of my life because it's just not working there, where am I going to be 12 months from now from that one decision? And so on and so forth. Make sense? So again, this is what I see here from the 10-year. This big market from here as well too, as you can see. Right, we've obviously had this very big sort of downward trend from here. So once again, I do see possibly coming back down to here somewhere, maybe a bit lower. Not too much, right? Maybe a bit lower from there, and then we see something like that going on. And again, when we start to see this thing happen from here, this is probably what we're going to see over the next 5 years into the early 2030s. And then when this happens, this is where we start to measure gold and what's happening with gold. And this is where I see gold being, this is the weekly chart here with gold. And this is where if I just, and then this is where, right, that target up there, this is where I see gold going. But first, I don't believe we're going to just going to continue up from there. Once we do go through the initial crash of the stock market as well too. So this here stimulating into a bubble, right? Once we go through the initial crash, gold will crash as well too, and we'll probably see a big drop from there. And then after that big crash, then we're probably likely to see a nice rise from there as well. So overall, guys, that's what I'm seeing right now on an overall basis, especially for the next 5 years. And just remember, traders, that one of the things that I'm trying to do here is that I'm a very big long-term bull with gold, silver in the mining sector. But as this thing unfolds, we're going to get a really big correction out of it. But then on the other side, we're probably likely to see some huge swings from there as well too. So I don't want you to be focusing so much on the short term on gold and silver, but just looking at the overall big picture, what's happening through there. And the thing is, guys, is that one thing that I really want you to be focused on as well too is that this is the indices and gold and silver, but the individual stocks, there's so many amazing things that are happening right now just on an individual stock basis. And these are just some of the things that's happening from there. And the last thing that I really want to sort of walk you through is the crypto winter that's happening right now. And the really big interesting thing is as you can see here, right? Like, look what's happening here with the crypto. And what I mean by that is we go through these different phases, right? Remember I said before about the price and time phases. So the price phase, this is a price phase, and then a price phase. But look at this here. We went through this time phase through here, another time phase, and we're going through another time phase through here, right? So we're going through one of these winter sort of, another winter period maybe, but another price phase here. And so the whole thing about this is, which actually makes sense because there's just so many people that are bullish to these crypto markets, but I don't believe it's over, right? If I look at this very big long-term, to me, I'm always looking at these very big sort of long-term bull market. So this is the weekly chart from here. I reckon just by looking at this level from here, that this massive trend line from here, if crypto does get down towards the 80,000 level, somewhere in there, then that's where we're probably likely to see, damn, I saw a thing from Andrew Tate just recently, a while ago, up here around 110, he actually shorted it, and man, it's amazing, eh? It's amazing. So anyway, so yeah, but down through here, and then we're probably likely to see a nice little bounce from there, I would say, and then maybe even continue back up from there. And the same from Ethereum as well too, right? Ethereum is actually just huge swings, right? Big moves up and big moves down from here. I actually originally thought that Ethereum could actually be going through this level from here, and then holding and then maybe pick back up. But as you can see, that we've started going through a bit of a downtrend from here. So there's a massive crypto winter that's happening right now across these markets, and it's just not looking good. But on the short term, we're going through this volatility right now. But on the long term, I think cryptos are good from here. On the overall next 12 months, guys, that's what I see here coming from just looking at the overall markets and seeing what's going on. So just to quickly recap here, guys, I see initially stock market, big breakout soon, very big, strong move to the upside. That along with that is then going to cause the interest rates to have a nice move to the downside from here overall. As you can see, this is the longer term target. If you go back to here as well too. Right, so something like that through there, as you can see. Something like this happening in the 10-year and the 30-year as well too. That there is through the melt up in the stock market. Gold and silver are probably going to become weaker as well too. Then in the crash, gold, silver, stock market, big drop coming. That's probably going to be towards the later part of next year as well. And then on the other side, these interest rates are going to go absolutely just crazy because inflation is going to be high. And this is where when people worry about the debt bubble and stuff like that, I think this is when everything comes home to roost, and then who knows what happens in the middle of 2030s. It's going to be a really challenging and changing time for the entire society of the human race, because it's already starting to happen now. But this thing through here, so the 2030s is going to bring back about massive change, and this is where I see massive changes coming.